that's corruption, right? That's extortion.
Well,
if you're saying, okay, I could take you to jail, but if you pay me this, we'll just agree that you can say I'm not guilty. I take your point. And this system is complex, and we don't have enough, well, self-inflicted. We don't have enough people to adjudicate all the cases, but if we didn't have some silly laws, just take the marijuana laws, right? How could there be people sitting in jail for marijuana that's now a legal thing? It's like, really? So if we didn't clog up the system with all of that, then we could probably have time to adjudicate the big stuff. And look, if a firm, and I can name names because they did this, JP Morgan, if they manipulate the price of gold, right? They spoof the price of gold and they make $20 billion of profit, right? That's all public information. That's wrong, right? That's illegal. But then they pay $1 billion and they're okay. I don't think that's okay. And so the same thing is going to happen here. Not necessarily them, but it could be them. But somebody or some buddies are going to come into the ETH market now, and they're going to get very short this asset because they have to take the other side of everybody who piles in long. And I don't like it personally.
In the world of cryptocurrencies, all eyes are on Bitcoin as it teeters on a critical edge. This pivotal moment revolves around a make or break support level at $24,900. If Bitcoin can stand its ground here, the bull market stays alive. But as a crypto expert aptly put it on a post, if it falters, it's goodnight to the bull. Should the king of cryptos stand strong, the next chapter could see it soar past the psychologically significant $30,000 mark. Presently, Bitcoin is priced at $27,593, with its recent performance showing a 5.02% increase in the last week and a 6.34% gain over the past month. The battle between the bulls and bears rages on, and Bitcoin's fate hangs in the balance. Bitcoin is a phoenix rising from the ashes time again. Last year, it faced tumultuous times as FTX, a prominent crypto exchange, spiraled into bankruptcy. Bitcoin itself lost over 60% of its value in 2022, shedding over $2 trillion in market cap. Yet, against all odds, Bitcoin is staging a comeback, defying the FUD, fear, uncertainty, and doubt. 5 compelling reasons are fueling Bitcoin's resurgence as we head into the year's end. 1. Seasonality. Bitcoin has a historical tendency to rally during the latter part of the year, often gaining around 50% on average throughout October and November. 2. Long-term technicals. Bitcoin is crossing the 50-month simple moving average, a bullish sign indicating its long-term strength. 3. Risk-on environment. Despite market turbulence, Bitcoin continues to outperform other assets, showing resilience, especially concerning the Nasdaq. 4. Regulatory clarity plus ETF approval. Regulatory developments are leaning towards Bitcoin ETF approval, offering increased access for institutional and retail investors. 5. Bitcoin hash rate soars. A rising hash rate suggests increased network security and miner investment, a sign of growing interest in Bitcoin. With these factors in play, Bitcoin's rally appears to have strong legs. Even a 1,100% surge isn't out of the question, particularly if supply tightens and a spot Bitcoin ETH arrives. After 5 years of silence, Satoshi Nakamoto's X account surfaced with plans to explore uncharted aspects of the Bitcoin white paper. Nakamoto's true identity remains a mystery, despite claims from figures like Craig Wright. Bitcoin touched 6-week highs near $28,600 before settling at $27,335. The community watches for a sustained bullish trend, preferring a gradual climb over rapid movements. Bitcoin's resilience within its trading range persists, with mixed on-chain indicators. The $26,800 level remains key in an ever-evolving market. Let's continue our enlightening discussion with Mark Yusko.
When you can go short an asset without having to own the asset, what doesn't matter what it is, whether it's oil, whether it's gold, whether it's molybdenum, whether it's Bitcoin or now ETH, that's a bad thing, because naked shorting is not allowed in traditional spot markets. And spot is not exactly the right term, but in the stock market, you're not allowed to naked short, right? You actually have to have the stock in order to short it. And same thing with a barrel of oil. In the olden days, if I wanted to trade you a barrel of oil, I had to have a barrel of oil. I couldn't just make up a little piece of paper that said, oh yeah, if I happen to have a barrel of oil on this date, I will get it to you. It's actually kind of BS. And I get it that financialization has some positives, but paper futures markets have a long history of enabling manipulation, and they make a lot of money for the people producing the paper and destroy a lot of people on the other side. So maybe I'm not as big a fan of futures markets as other people, but what is going to happen is large institutions now can short Ethereum the same way they shorted Bitcoin November 21, right? Almost to the day of the peak. They approved the Bitcoin futures ETF, and it got $1 billion overnight. And everybody's like, oh, that's so great. I'm like, well, think about it. For every buyer, there's a seller. And guess what? There can even be more bigger sellers on the other side pushing that incremental trade the wrong direction. And once that cascade starts, because of high frequency and because of the machines, those machines will just start chopping the bids. And it's just, history says it's not a good thing for short-term price. History says it's not a good thing for free and open markets, because it allows people with large balance sheets to manipulate. And I use the term manipulate intentionally because they've paid massive fines. They, meaning these large institutions, have paid massive fines, like hundreds of billions of dollars, without admitting guilt. I always loved that part. How the hell do you pay $1 billion fine, but you get to say, but I'm not guilty? Just the fact that you paid $1 billion says that you're guilty, right? I mean, otherwise you wouldn't pay. And so that's just, it's kind of like lobbying. If you have a choice as the approver, as the regulator, as the gatekeeper, as the traffic cop, there are lots of applications for spot ETFs, and there's lots of applications for spot Bitcoin ETFs. Now, why are spot ETFs superior? They're superior because you actually have to own the asset. It's like GBTC, the trust. It's not an ETF, it's a trust. But they actually have to have the BTC in custody, in the trust, in order to issue the shares. That's not what happens in futures. You can just say, yeah, knock yourself out. Go along all these paper contracts. I'll just make more. It's like the old Doritos commercial. Go ahead and eat them. We'll make more. And that causes an imbalance. And when the proportion of paper assets relative to physical assets in any market, and you can go back and look at oil, you can look at soybeans, you can look at corn, you can look at, any asset, when the paper ratio to physical gets out of whack, bad things happen. And it makes sense that a paper good printed out of thin air, what are you talking about here? That happens in other markets, the currency, right? If you can print an asset out of thin air, it makes the value go down. And that is kind of what happens in currency markets. It's why currencies consistently go down and why we experience inflation. But what it really is a theft of your wealth through the devaluation of the asset you use to procure goods and services. And it was, I saw this Twitter war the other day. I'm never going to call it X, by the way. This Twitter war, where two guys were trying to debate this construct that inflation is good for you. Like, on what planet? I mean, really? Have you been brainwashed that badly? Because just think about it. If I have $1, and over a period of 30 years, at 2% per year, it's now worth 50 cents of purchasing power. How is that good for me? I toiled for $1, and now I have less than $1 of purchasing power. How is that good for me? And you say, oh, but your income went up. Look at the history. For the average person, that ain't true. Your income goes up far less than your purchasing power is eroded. For the people at the tippy top, awesome. The all-seeing eye, right? Those people love inflation. Might be why they invented it.
That wraps up today's crypto news highlights. Stay tuned for more updates, insights, and analysis from the world of cryptocurrencies. Please share your thoughts in the comments below. Don't forget to like this video and subscribe to our channel for more engaging content.